Hi, I'm Tyler Ballhorn, and this is the Stock Scores Market Minutes for February 27th, 2017. This week's topic, why winning traders win. There are some simple differences between winning and losing traders, but it's those small things that make a big difference. Winners let their winners win. They have patience with these winners as they move higher, often adding to the position along the way. Losers will tend to sell their winners early, taking small profits, but hanging on to their losers, often adding to the position by averaging down as that stock moves lower. It's important to flip that around. You need to have patience with your winners. Stocks that are growing with profit over time, add to them, let them work. When the trade stops working, obviously you want to exit the trade, but what you don't want to do is hang on to the losers. Don't take big losses. When the stock trade isn't working out, cut it loose and move on to the next one. All right, let's get into this week's analysis. Here is the 30-day, 60-minute chart of the S&P 500. You can see we've had a nice upward trend. Mostly this week we went sideways, sort of broke down through the bottom of the trend line midweek, but then came back right at the end of the week to close near the highs again. And so it's looking pretty good still. The upward momentum is there. The threat of that upward trend line was ultimately broken. The buyers remain in control. On the longer term chart, you can see that we're running away from the trend line. There's our trend line. If you draw a parallel line, you can see we're getting up close to the channel. This trend is starting to go a little bit parabolic. So I do think we're going to run into resistance in the next week or two. That's perhaps a reason to be somewhat cautious near term, but the trend is up. And although we may hit that resistance and pull back short term, until this longer term upward trend line is broken, we don't need to get too bearish. On the Russell 2000, which has lagged the big stocks, we broke out of a flag pattern a few weeks ago. We've been trying to move higher. This week was kind of a fail, basically stalling at resistance, but it does look to me like this wants to go higher rather than lower. On the Canadian market, we had some selling pressure this week. This is a 30-day, 60-minute chart, and you can see that we actually sold off fairly sharply this week, taking it down near support. So we should bounce in the near term, getting down to that support zone, but I do recommend caution because when we look at the longer term weekly chart, you can see that the market is basically pulled back to the upward trend line. Hasn't broken the upward trend line yet, so this remains bullish, but if we come to that down upward trend line and then ultimately break down through it, it'll be important to be cautious with Canadian stocks. TSX Venture, similar sort of thing. It had a little bit of weakness this week, but in a different pattern. This one rallying up to resistance. And last week I said this market will probably get stuck there, and that's exactly what happened. Now, typically what will happen is we'll go sideways for a few weeks, and then it's a question of whether we can break to the upside or whether we roll over and test the lows. My inclination is we probably pause and then break to the upside, and this market continues up towards the longer term resistance zone. On the Treasury bond market, we had a little bit of a gain this week, which meant that interest rates went down. We are still below the downward trend line, and if we have another week or two of gain, we're going to hit that downward trend line where the bond market will find some resistance, probably roll over, and that means short-term interest rates down, but longer term we're still looking for interest rates to rise. US dollar, a little bit of a pullback after a nice run and starting to break that pullback. Hasn't broken the pullback with a whole lot of authority, but it does look to me like this is more likely to move up than down, and that will have some effects on the global market because, of course, a high US dollar makes things like commodities more expensive. Well, gold had a pretty good week. It's had a good couple of months. Really all it's doing, though, is taking out the emotional sell-off that we had at the end of 2016. So it's got another week or two of upside until it's going to hit that downward trend line, at which point I think it's going to roll over and move lower again. So if you're an owner of these gold names, great, they're bullish in the short term, but recognize that they're going to run into some resistance longer term. On the oil market, very, very low volatility. We got a lot of chop in this market, really directionless trading. Not necessarily a bad thing if you're an oil company, you like that stability. But if you're a trader, we need to see a breakout to the upside through that resistance, and that will start the reversal of that very long-term downward trend. We've been consolidating sideways here for over a year, and it's probably due for a breakout, but still no sign of one. TSX, or pardon me, the VXX, which is what I call the fear index, what others call the fear index. We've had a little bit of a rise in the last little while, but on Friday we opened gap up and then came back to fill the gap. And it just looks like what we've seen over and over again. Any little bit of strength is often sold into. So there's no real fear building yet, but I always keep an eye on this because when the market does correct, this one is a winner to trade. Right now, generally stay away from it. All right, so US stocks, bullish on both time frames. Canadian, bullish long-term, short-term neutral. Gold, neutral long-term, bullish short-term. It's still got good upward momentum, but coming into longer-term resistance on the weekly. Oil, neutral on both time frames. US stocks continue to march higher and are strong, but they are risky given the parabolic trend in that market. Some weakness starting to show in the Canadian market, but we still need to see a break of trend, which is what we should be watching for. Gold continues to move up in the short term, but it is approaching resistance at that downward trend line. Oil stuck in a trading range, and there's only been a minor increase in fear recently. All right, let's do the trade of the week. This was a day trade from, I believe, Thursday, and it had lots of strength in the open. That's what I pick up on. The volume was abnormal. The price action was abnormal. And then it went very quiet and sideways through the middle of the day. Well, right here, you can see, it's hard to see, but there's a pink dot there. That means that there was abnormal price action, which you can see on the price chart, and also abnormal volume. That told us that the buyers were coming back. So you buy there, support right here, and it went up for a pretty good little run into the close. Kind of a cute little trade right at the end of the day for a decent reward for risk trade-off as it marched higher. Well, that has been the Stock Scores Market Minutes. Hope you've enjoyed it. Please subscribe to my channel, like the video if you enjoyed it, and as always, trade well. See you next week.